Good morning, everybody. We're going to get started here in just a minute, so stay tuned. We'll be back on. Just want to make sure my sound and everything is working properly, so we'll get started here in just a minute. Okay, we're ready to go. Hope everybody had a great weekend, and welcome to Navigation Trading Live, where we're going to go over the markets. We'll jump on the platform, take a look at what's going on in the different markets, and then share with you our trade of the week. So, a lot of exciting stuff going on at Navigation Trading. A couple announcements. One, we've got a new course that should be released probably next week. Don't hold me to that. If not next week, it'll be the week after. Second, we have for quite a while I've been talking about getting a newer, lower, reduced commission rate for our students through TD and through another broker. That's getting closer. I thought it was going to be done a couple months ago. They kept pushing it off. So we're getting close. So I'm hoping by the end of this month, I'll be able to make the announcement about the new lower commission rates that we have available for our students through two major brokers. So stay tuned for that. I've also got another course that I'm currently working on, and it's all about earnings announcements. So earnings announcements are kind of their own little animal as far as how you need to trade them. So I'm working on that. It's probably a month or two out before that's released, but hopefully you guys will enjoy that. It's gonna be super exciting. I'm really excited about all the stuff that we have coming out. We've got some new technology that we're gonna be releasing as well. Can't really say anything about that yet at this point, but stay tuned because it's all good stuff. So let's take a look. Just as a reminder, don't forget this session, it's all about you. If you have any suggestions on topics or comments or questions or trade strategies or anything that you'd like me to go over live in this session right before the markets open, feel free to do so. And if this is your first time, remember that we broadcast this live every Monday morning, 8:25 Central, right before the markets open, where we'll go over some different topics and then review the markets and then go over our trade of the week. If you can't get here right at 8:25 for the live event, it will be posted immediately following the end, both to our Facebook page and YouTube channel and Twitter feed. So hope you guys are enjoying this. If you are, click the likes, click the leave comments on Facebook and YouTube. That really helps our status with them. So, and then obviously if you have any questions or comments or feedback, feel free to post those in the comments as well, or shoot us an email, info@navigationtrading.com. So trade of the week. So let's jump onto the platform and take a look at what's going on in the markets first, and then we'll jump into our trade of the week. So let's take a look. The market, the stock indexes are stock indexes. I never know what to say there. I think stock indices. Plural is indices. Let's go with indices. So the stock indices are relatively flat. S&P's up a little under 1 3/4. But look at what implied volatility is doing. Even with this, little bit of a down move and then the market's slightly up today, implied volatility continues to rise. And it's showing in the 60th percentile on the E-mini S&P futures. Now, what I actually would look at SPY or SPX to get the most accurate reading, but look at SPX. It's at the 44th percentile. So it's getting back in that range to be able to sell premium. And we're kind of splitting hairs here. I mean, you could start selling premium now. In our alerts subscriber service, we already do have an iron condor on in SPY. So, I want price to move a little bit or implied volatility to go up. And there's the opening bell. I do want implied volatility to go up a little bit more before or price to move before we would add another iron condor. So if it keeps moving a little bit higher, I'd look to add another position on there. And you could do that in SPY or SPX or the ES futures. So I like to shake it up a little bit. I like to diversify between the different symbols. If you look at the Russell is down slightly. And so you can see the IV percentile about 57. We've got iron condor in IWM already. If you don't, that could be a decent choice. TLT, so the bonds are up just a little bit, and you can see implied volatility starting to creep up there. And think about this. I mean, there's just going back to just the S&P 500 because it's the the broadest of the stock indices. Even with the market relatively flat, implied volatility spiking, and that shows you the uncertainty. Obviously, we had the airstrikes in Syria late last week, and then just a lot of other geopolitical uncertainty going on. The stock market doesn't have to tank. It doesn't have to move down for implied volatility to go up, and that's exactly what we're seeing. We're seeing uncertainty. Now, does that mean the market's going to go down? No. Does that mean the market's going to go up? No, it doesn't. It means there's uncertainty in what's going to happen in different areas of the economy. Okay, so just be aware. What I would tell you is I'd be real nervous having a lot of long bias at this point. Our navigation alerts portfolio is got short delta, so we've got a little bit of a bias to the downside. And that's how I would be more comfortable. We can sell premium, and if the market does go up or volatility does contract, we're going to profit from those premium selling strategies. But if it does turn around and go down, we're going to be protected a little bit on the downside because we're carrying that short delta, and I think that's crucial to do when you're selling premium. So if you take a look at like the VIX, for example, it's up over 3.5% this morning. Again, having to do with that increase in volatility, increase in uncertainty. Oil's up a little over 1%. If we take a look at oil, it's had a nice little run. Implied volatility is still too low to be selling premium. So we'll wait for IV to spike before we sell any premium in there. If we take a look at gold, gold's been a little bit range bound the last couple weeks. Implied volatility is still fairly low in gold. Silver had a big move on Friday, big outside candle there, but implied volatility is still fairly low, nothing to do in there. If we look at natural gas, we do have a position on in natural gas. It's just had a pretty significant run to the upside. If we look at UNG to see the IV, still fairly low. Soybeans are finally starting to catch a bid down here at the bottom after a huge drop there. So we'll see what happens there. Corn, pretty range bound. Wheat, pretty range bound. If we look at EWW, which is the Mexican ETF, still on a huge run up. Implied volatility starting to creep up there. FXI, which is the Chinese large cap, kind of range bound, but implied volatility spiking there. A lot of talk with the Trump administration and meeting with the Chinese officials to try to iron out some things. So a little bit of uncertainty there. So we may see some continuation in higher implied volatility there, which would be nice. Potentially give us a trading opportunity there. But for the trade of the week, the symbol that we're really going to be looking at is the euro. So if you look at the euro implied volatility percentiles at 95. Now so that's the futures contract /6E. The corresponding ETF is FXE. Okay, so what we're going to do is we actually already have a strangle in our alerts portfolio. So if we take a look at that, here's where we're at. So we've had prices moved a little bit. So when we put this on, implied volatility was just over 50. Okay, and that was over a week ago. And so what I like to do is I like to scale into IV. So as implied volatility continues to increase from 50 to 60, 70, 90, I want to add additional positions on as implied volatility gets higher. Okay, so now the price of FXE on our strangle was pretty centered, and so I didn't want to necessarily scale with price exactly where I already put it on. But since price has moved down a little bit and implied volatility has gone up since then, I want to look to add another position. And what I would do is, what I'm going to do is add another strangle. Okay, so that would look like this. So it's going to recenter that. So now we would have two different strangles on. So combined, it would look like this. So it widens our break even. It expands our potential profit opportunity. And again, we're staying mechanical. We're selling premium into high implied volatility. Now, if you don't have permission, if you don't have tier 3 permission to trade naked options, so you can't do the strangle, the other option would be to do an iron condor. Okay, so that would look like this. So the strikes I'm looking at here on the call side, 105, 107, and then on the put side, 98, 96. I'm just showing 4 contracts because that's the same I was showing on the strangle. You can see you're on the strangle you're collecting 80-cent credit. With the iron condor you're collecting less, so you're only collecting 61 cents. But you're obviously defining your risk. So if you're trading in an IRA and you can't do naked options, you could do the iron condor. Or if you have a smaller account and you need to be very conscious of the amount of capital you use on each trade, defining that risk is going to help reduce that capital requirement. So therefore, the iron condor could be a good choice. But that's where we are. That's what we wanted to look at with implied volatility as high as it is in the euro. Seeing a little bit of a down move in the euro versus the dollar, meaning the dollar is going up. So it's got an inverse correlation because it trades as a pair versus the dollar. And so that's what we're looking at. So hope that was helpful. If you guys have any questions or comments, feel free to leave them here or shoot me an email. And don't forget, we are still running our Navigation Alerts 2-week trial for new members, just $7 for 2 weeks to check it out. So if you haven't yet, you can get these trade alerts like we're showing here, but you'll have access to our full portfolio as well as the all adjustments, new trades, and closing trades. Everybody have a great week. We'll talk to you soon.